Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Beimnet Abebe from Galaxy Trading, our friend, is back for a solo episode. We did one with him in November where he very clearly laid out his thesis that we were entering a bear market in Bitcoin. Well, unfortunately, Beimnet has been correct. I mean, we're now more than 25% below 100K. Almost, I think, 40% drawdown from all-time high in Bitcoin. We'll catch up with Beimnet about that, but also about weakness in the broader markets that he's tracking, implications in the labor market and the Fed and other things with Beimnet specifically. Before we get to that, I need to remind you, please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. So, yes, it's a Beimnet Bear episode again, Phineas, but I think that's timely, right?
Timely. I mean, I over the weekend, the last few days, I've been thinking, what would Beimnet think or say? And
well,
I'm
we had
excited to have
major
one.
movement Friday and Saturday of last weekend. Something like 15%, like day went from 90s to like 80K, 78K over the weekend. I released a research report on Sunday night to our clients and on Monday to the public, saying that I think we can go lower still.
Are the text threads between you and your other many deep friends in the space blowing up over the weekend, or is everybody sort of abstaining? Like, what's the temperature of your community?
Some conversation about it, but again, like I think the people, and look, like the people I talk to regularly, like personally about Bitcoin, are also long-term Bitcoin investors, right? And so, I mean, we've been seeing the writing on the wall here, I think, for a couple months even, right? You know, Bitcoin is like a momentum asset, as Beimnet always says. Like, if you're not making new all-time highs, like, it doesn't often just go sideways. We've had notable periods when it does, and that's why they're notable. It usually wants to go up or down, and up looked hard. You know, I had something I want to talk to you about, though, unrelated to Bitcoin, because we'll get plenty of that in a minute with Beimnet. But you notice how everyone wants you to sign up for something? You got to sign up. You go to buy a shirt at Lululemon. Give us your email. No, I won't give you my email, right? Oh, trying to buy something for my kid on the internet, like open an account. No, I don't want to open an account, right? Download my app. No, screw your app. Like,
Is this a concern about privacy, or is this an annoyance concern?
I think there are privacy concerns, but no, it is more about clutter and annoyance, right? Why do I have to give you my personal information to buy a widget from your store? Like, that doesn't make any sense. Here's money. Like, just take the money. I mean, you know, the credit card company or the card issuers, they have my information. Why do I have to give it to you, random person at a cashier?
Well, they want to follow up with an email.
I know why they want it, but or like even the stuff where it's like, you know, join our rewards program at the supermarket so you can save $1 or $2, right? I'm just saying, like, is that how low you think of your own identity information? You'll sell it for a mere $2?
So
there is a privacy aspect.
You're going to stop. Yeah, I figured it was going to be privacy, especially people in this community. They like to be anonymous as best as possible. You're very much not anonymous.
Well, I've got a very public persona, but like I take great steps to stay private, and as I encourage everyone to do. No, and I don't think people really, you know, Google and read about like the data brokers, right? There's an entire, I mean, I think a lot of our audience who's very intelligent and sophisticated will know about this. But there are huge corporations that maintain thousands of data points of information on millions of Americans and people. And if you download an app, look at Apple does a really good job of this in the App Store, right? No, I don't want your app, by the way. All right, I don't want your app. In fact, I've got hundreds of apps I'd like to delete from my phone, right? I want fewer apps. But if you look at the privacy when you go to the App Store, for each app, Apple will tell you exactly what information the app is taking. Almost all of them at a minimum, even if it looks like it's not a lot, they want your identifiers. And that means typically your device ID, which is a unique number affiliated with your phone. But even if you only give them that, they can go take that to the data broker and say, oh, do you know anything about this device? And they'll say, oh, yeah, it's this person. Here's 5,000 data points on them, like what they like to buy, how they vote, how much money they make, how much money they spend, what do they spend it on, right? Like all their, demographic information. How old are they? Where were they born? What race are they? What gender are they? Et cetera. The world is gathering information on you at all times. And so that's why, the poor, cashier at a store doesn't it's not them asking, right? But I just say, no, hey, you go to buy something at, is that Men's Warehouse and you a tie or something. They're like, what's your phone number? I'm like, no. They're like, what do you mean? No. I'm like, I'm not giving you my phone number. I needed this tie. I'm giving you money. How's that?
Everybody reach out to Alex on Twitter and tell him whether you feel like this is more of a privacy issue or just a bother.
It definitely is a bother, but you should think of it as a privacy issue too. No, I don't want your app. No, I'm not opening an account. No, I don't want to sign up. No, I'm not giving you my email, all right? Let's get right into it with Beimnet Abebe. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thank you for having me.
Well, you look like a Galaxy Brain in particular these days because you have been calling for a lower Bitcoin price at least since mid-October, but we're finally working on that clip show to put out to show exactly. But listeners will know for sure that you've been saying for a while that Bitcoin could go a lot lower. You expected it
will.
To. Yeah, and you at least, I think for about at least 2 months, we did a whole episode with you previously in November. I think it was November 22, 2025, November 22nd, I should say, where you explicitly said the 200-week moving average was your target. And we're not there yet. It's around 60, we'll say, right now. But, you were saying that when it was over 100 still, or around 100. We're more than 25% lower than that now. Is there more juice to squeeze?
Absolutely. Essentially what's happened is the market structure is broken down. So liquidity has kind of evaporated. Sentiment has gone lower. And, there are no positive catalysts. And then I think the next leg down ultimately is probably going to be driven by broader risk. I think equities have started to show signs that they are cracking. And, I think, the NASDAQ's already been off basically 4% in the last 2 sessions. I think there's probably an additional 5 to 10%. And even within, if you look kind of deeper outside of the index, there is a ton of carnage in equities, particularly in software, right? Software has taken a huge beating over the last couple of weeks. And I think, this is a market that has struggled to sustain new highs. Essentially, if you go back to the start of the week, you're looking at the S&P chart and you're like, we're at the same levels we were in October, and yet AI has advanced tremendously in that time. And so I genuinely think that when people feel like stocks can't go that much higher, you kind of lose that marginal buyer. And I also think that the de-dollarization narrative is playing, a reasonable role in that as well, from the standpoint that, I think the marginal dollar abroad is less inclined to go into equities. And if you look at the data, retail in the U.S. has been a huge buyer, but it's showing signs of slowing down. And so, you've got 2 large incremental buyers that are probably stepping away from the market, and the fundamentals seem to have turned. I think the concerns around OpenAI and the whole complex are at the forefront for a lot of investors.
Mm-hmm.
And,
what concern? Can you talk about those concerns?
Yeah, basically,
what are those concerns?
OpenAI has made a tremendous amount of commitments to a bunch of companies in terms of how much data centers that they're going to use, chips that they're going to buy, et cetera. And they're essentially funding themselves by continuing to do up rounds and not funding themselves via profits that they make, because
and then people are looking at various models of their expected profits, and they're concerned at their
correct.
cost.
And it caused, I think Microsoft was down over 11% after earnings, partly because a lot of their future revenues are attributable to OpenAI, or at least that's what
their partnership with OpenAI.
Correct.
And then also talk about software, and I think people
software
will get why is software under pressure right now?
Because investors are panicked. they are panicked by the fact that Claude and these other models can essentially do the tasks of software. And when you see that, and when you see software companies trading at 20, 30x multiples, you're like, no, that doesn't make any sense. In fact, their moat is under attack. So why am I putting like an insane like growth and valuation multiple on these companies when, the tech underneath them is fundamentally changing? And there's so many other implications. I mean, think about the amount of private equity exposure to software companies, right? And their comps are in public markets. And, if they're nascent technologies, like maybe Claude could just do what they
I see. If the
we're
public
trying
comps
to do.
Get revalued, then even the privates get affected.
Correct.
Is it that like I can just ask ChatGPT to like make the PDF for me rather than using Acrobat, or is it also that I can vibe code a new competitor to Acrobat?
Both.
Yeah, both.
Both.
Okay.
I mean, just simplifying tasks, organizing, database structure. I mean, there's so many different things that AI is good for. And so it's causing like a fundamental rethink of like where like software companies should be valued.
And like a lot of those companies in the top, a lot of the world's biggest companies are fundamentally software companies. I mean, Microsoft's a great example. Google as well, although a little different with their, sort of web-based and ad revenue more than subscription model. But so that's a huge segment of the technology sector.
Correct.
Is software as a service.
And really, like what's driven returns over the last like decade, it's been tech.
Yeah.
It's been U.S. tech. And so, I think folks are panicked, and that just leads to a market where there is no like substantive marginal buyer, and markets move at the margin. And so, I think there's a lot of folks that are very scared. And then you've got like geopolitical risks and the mess in DC, like, however you want to think about that. That's certainly not helping at the moment. And so, this is a pretty bad setup for risk. And who's going to want to buy crypto when they're worried about the NASDAQ and some of these like, huge blue chip names that are expected to make, tens of billions in revenue? Like, this is a tough market to be long stuff that is further out the risk curve.
Yeah, this is why, and you also mentioned in the beginning of this explanation that the de-dollarization part of it, what are you selling what are you selling into? What do you want to hold in that spot?
I think right now you just want to be long cash.
But like dollars, but the world is also trying to be net long, at least slightly less cash. Right?
Again, it's hard. I mean,
dollar's still better than other fiat currencies, right?
It's still the best house on a shitty block, and the only other alternative is gold. But again, there was a day last week where silver moved down 35%, a $5 trillion asset that is globally traded, moved down 35%. I think that's so. Like, just to take a little side pivot, like we wiped out about like $10 trillion between the moves in gold and silver.
Yeah, Bitcoin lost like 2 or 3 of Bitcoin's entire market cap in a day
more.
or two. Yeah,
more. Now that price is lower, right?
Yeah.
And just to give you an idea, I think the S&P is like, off the top of my head, maybe like a $65 trillion asset.
Yeah.
And so to wipe away $10 trillion in this other corner of the world, financial world, that's a big deal. There's a wealth effect to that as well. But anyway, what do you keep your money in right now? I think the goal is to be defensive, right? Try to put your stuff in safe short end fixed income that you get a little bit of yield in. But I think this equity correction has room to run.
Yeah.
Particularly because the money printer is far away.
Yeah, and I know we're not experts on Kevin Warsh, who's I guess I don't know if he's been formally submitted by the White House to Congress to be nominated to be the next Fed chair, but he's been named to be. And you saw the dollar rally a bit after because he's seen not as actually a money printing bonanza guy.
He's a very credible.
He's credible.
Member of.
He's thought, it appears by markets, to be a pretty credible choice actually for a prudent Fed.
Correct.
It probably still cuts a little bit in the near term. We think, right?
Maybe, but again, I think.
But again,
a prudent member is data dependent.
Yeah, it's not an obvious.
But to be honest,
money printing bonanza man.
I think we're headed to cuts for other reasons that aren't because the administration wants them.
Labor
market, it is showing it has been showing signs of cracking, but like ADP today came out at like 25,000. The employment section of ISM services was a bit soft, and ISM manufacturing has been in contraction territory for like a really long period of time. And then when you dig a little bit deeper in terms of like where there's job growth, right? It's in like healthcare and not in like professional services as much. And if you look at like recent college graduates, like a lot of them are not employed in areas where they actually got their degrees.
Yeah,
there's a huge degree of underemployment. It's bad.
Look, for the youth, it's not.
For the youth, it's not good.
Is the youth unemployment as a baseline number also high?
Correct. Yeah. It is north of 10%.
And you're saying they're not getting the jobs they thought they would get, so they're possibly underemployed as well.
Correct.
Yeah.
And so there are material signs that labor market's cracking, and then sentiment on top of that. If you look at the consumer confidence numbers, they're bad, like objectively bad, right? And so sentiment's bad, employment's turning a little bit, and inflation is still reasonably above the Fed's target, but it's a two-sided mandate, and we know, and we think, not we know, but we are reasonably confident that the labor market probably weighs more on their decision-making process at this point in the cycle.
Yeah.
And so I think the market probability of cuts is probably a little underpriced at the moment. Making the case for being long, front-end U.S. fixed income as like a place to park capital for the time being, actually pretty reasonable, because you might get that kicker of like, oh, rates are actually going lower.
Yeah, interesting. And also, I just to boo your point, the way I think about the dual mandate is the Fed would like to make inflation its only sole mandate. They'd like to, theoretically, but the people losing jobs is something that will beat down their door, right? Like they might want to keep it high to get back down to their mostly made up target 2% inflation.
Yeah.
But if, Americans are losing their jobs en masse, like they're going to be forced politically to act the same way they would be to tighten if inflation was 10%. They would absolutely have to raise rates, right? No matter what employment said. It's like when you're down at like the 3 area, it's low enough that the labor would overwhelm probably any lingering.
But it's also like, in theory, if labor market's actually cracking, like in terms of like what that means for inflation on a forward basis, it probably means
it would help inflation go down as well.
Correct.
Right? And then do you see, we talk about software as a service in particular, or even just subscription-based software tools, literally like Microsoft Office is one of them, right? Being affected by AI. Like, are we seeing signs yet that the labor market is affected by AI? A lot of people obviously have talked about a future where like a universal basic income might even be needed if we have AI-powered robots doing all the jobs. What's going to be left for? Are we seeing any of that yet that you know of in the labor market?
It's been slow.
So not quite yet.
Not quite yet. But Amazon has had huge layoffs. I mean, I think Washington Post today laid off like 600 people. I don't know if that's AI improvements. But you're seeing like massive corporate efforts to get better on AI.
Yeah.
And
the market are they sniffing though that at some point in the future there will also be more AI driven layoffs?
I don't think.
Or is it not top of mind yet?
It's not quite.
But
top
most
of mind
people
yet.
do think that at some point
100%,
that's coming.
That's 100% coming.
Yeah.
But it might lead to like lower wages first, because like you don't need that much specialized knowledge as much anymore.
That's true. Like we don't quite have.
I'm pretty sure I'm stupider than the AI models. But anyway.
Yeah.
But not to be like so doom and gloom. I do think that the market. I view this as more as an opportunity for those folks that can kind of go both ways in markets. If you're long only, obviously this is a hard environment.
Right.
But it's definitely like, if you've had a really good run, like please take some chips off the table.
Yeah.
And if you're tactical, like you can play for downside in certain things. I think just one last note on crypto.
Yeah.
Given how far we've moved so quickly, the lack of liquidity in the market, like the swings in both directions are going to be violent.
Yeah.
But the thesis still holds that you will test 60
That's what you
at
think,
some
yeah.
point. I think 70 is a good first stopping point.
Yeah.
For like a period of like consolidation.
You still think the price will try to converge on that long-term 200-week moving average?
Correct.
Yeah, that's still.
And it might be
now.
in a couple months. It might be in like a couple weeks.
Yeah.
At this rate. But I do think that pretty much every cycle in Bitcoin has had a move to the 200-week moving average. Yeah. And I don't think this instance is any different.
What is different is that the 200-week moving average in 2013 is 2014 and 15 was like $100 something, and now it's 60K. I mean, think about it. It feels. I know it's 60K would be a 50% plus drawdown. That would still be less magnitude than the prior drawdowns, which were all like 70% plus from all-time high during prior cycles. And just we joked when it was crashing to 100K that's like a funny thing to say after all these years in Bitcoin. Oh no, Bitcoin crashes to 100K. Well, honestly, oh no, Bitcoin crashes to 60. Doesn't actually feel that bad. That's so much higher than we'd previously crashed. Obviously, if you bought 120 as your only position, you don't like the feeling of that.
Yeah.
But I think, is that what it would take for you to flip bullish? I mean, when you say target,
yeah, I think once you're around there, I think
you like the entry there.
I like the entry, and I will say that there is risk you go a little bit lower, and so I think the game plan is to start averaging in around there. Yeah. Because realistically, what's going to happen and what will take Bitcoin higher again is there's a lot of folks that believe in the asset, but that also believe in the 4-year cycle. Yeah. And so the people that took profits will be recycling their money back into Bitcoin once it gets to a value area.
Yeah.
And that value area historically has been around the 200-week moving average.
That's right.
And the way I put it is, it's going to be really easy to pitch somebody Bitcoin at 60K because you'll be like, oh, it was at 120K 6 months ago.
Like, it can go there.
It's
proven it can go there.
It's proven that it can go there.
Yeah.
And, realistically, if it's down there, you're going to be talking what point in the Fed easing cycle are we?
Yeah.
Is the money printer turning on soon? Like, there's so many other things, but it's just like it becomes a much better risk reward trade from the standpoint of like, what are you really risking at 60K? Maybe it goes to 50, 45, right? Like, so you're risking, 10 to 15K, so call it 20-ish% of your position to have a potential double, right?
Right.
That's a 5-to-1 risk reward ratio.
It's not bad.
Yeah. So I that's kind of my reason why I think that area will kind of hold.
Yeah, that makes a lot of sense. And do you think that that's what other people are thinking? Do you think, is it the type of thing where like it doesn't feel that, here's the thing too, because we've gone to the 200-week in these prior ones. It doesn't feel yet that, but it might when we get there, that there is a mad rush to go buy that dip. Actually, most of these prior bear market bottoms, we really grinded low for a while, around the average.
Yeah, and that's probably what's going to happen again. Like, you're going to have like a consolidation.
Well, and that's why you are you've got long-term views, but you're also professionally and personally a tactical. You got to wait and also see what the other things are. So, the 200-week might look like a good buy, but if we're, also everything else is crashing, if we're then maybe it does go lower.
Yeah.
And so you got to evaluate at that moment. It does make me think too that, well, actually, let's go to this question about the debasement trade, because one of the things that I think has been so disappointing in the last, call it 6 months, really fewer, like 4 months now maybe, has been watching the divergence between physical gold and digital gold, and Bitcoin's empirical failure to trade recently as a hedge. Now, there's caveats. Of course, it was up. Even at 72K, it's up 4.5x or 4x from its FTX bottom, and that's still more than gold ultimately was up in percentage terms. But that's kind of nitpicking. It is, I think, fair to complain that Bitcoin has not performed like gold right when gold was needed most or whatever, right, in its mind. Do you think there's a chance that the world starts to treat it like gold, maybe if we can get those better value entries? Because it has fundamental reasons.
So. The fundamentals are always there. I think they're bigger societal things.
I mean, you
like
can't
wealth
pay with
taxes and
Right.
transferability and like you tried like taking a couple $1,000,000 of gold on a plane or silver.
Yeah.
Yeah. It is incredibly painful.
Yeah, and I can tell you, like, you
but
will
I
get
can-
seized by the TSA if you
Yes,
try that.
but I can move $1 billion of worth of Bitcoin in my head.
Yeah, very easily. Yeah.
Right. And so I think ultimately that value proposition will be clear to the market
One day.
And to be honest with you, it's such a momentum driven market. The moment price starts rallying and people are like, oh shit, it went from, 60 to 70 in like a week. Oh my God, is it going back up again? People will FOMO back in.
Yeah.
And especially those that had sold.
All these lack of, even as you pointed out, the lack of clear catalysts in the near term, all of a sudden people will come up with a bunch of good reasons to own it.
Correct.
It is true that, like, it's so easy to be negative on it when it's down a
One,
lot.
it's going down.
As soon as it starts to go higher, everyone will come out of the woodwork and be like, I always loved Bitcoin. And
Right. And, the main idea is, like, it's reflexive.
Right.
Right. This market is reflexive both to the downside and to the upside. And so once that reflexive cycle to the upside begins, it will go a lot higher.
Yep, and you get more liquidity coming in and everything. Well, I just want to say, I was upset. I'm upset with our audience, okay? Because when you enunciated this near-term bearish thesis, well, you've been saying it, but I think at least initially, certainly after the November 22nd episode we did with just you.
Yeah, I mean, I was bearish in October, probably September as well.
And we've got receipts to show that. But also, at least on that episode, I think it was, I behooved our audience. I said I would do our part to make Beimnet wrong. And I don't know, maybe our audience didn't have enough cash. I didn't have enough cash to turn this thing around. I've been buying, to be clear, Bitcoin. I always have been buying.
Yeah.
But again, unfortunately, Beimnet has been right. But I would say those key levels. I did put out a report this week.
Yeah. Which was
making a lot of the same arguments now that you've been making to me. And because it's just,
you've been right since you put it out.
Well, yes, even just in a few days.
Yes.
But yes, I mean, but still, I think there's there's a lot of evidence for what you're saying, and I think you can be long-term bullish and love Bitcoin, but still want to be tactical with how you think about it. And like to be clear, like I always want to buy Bitcoin. I think it's going a lot higher in life.
Completely.
Yeah,
absolutely.
So I like a cheaper set.
I mean, I genuinely think that the bottom of this cycle is a generational buy, or 4-year cycle buy.
If they, make
sure to sell.
The funny thing about the 4-year cycle, I've been saying over the last couple of years that I think it's degraded, if not dead entirely. And I guess it is kind of the 4-year cycle if we look at 22 to 26. But actually, it had been green, 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 red, green, 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 red. Like the cycle was materially altered because of the all-time high before the halving. Technically, this year is supposed to be a green year in the 4-year cycle, not a red year. But it's undoubtedly empirically proven to at least be cyclical still.
Yeah.
It's not no cycle. So, but yeah, I relish the opportunity to buy it cheaper. So,
fantastic.
I don't find it depressing, I guess is what I'm saying. Although, I would say it's not euphoric.
Yeah.
It was nearly, 2 months ago, it was at 100 over our shoulder. Now we're over 25% below 100 now. You're materially below 100. We were at 98K 3 weeks ago.
Yeah.
So, all right, well, we'll leave it there, my friend. Beimnet Abebe from Galaxy Trading. My friend, thank you so much.
Thanks for having me.
That's it for this week's episode of Galaxy Brains. Thank you to our friend and guest, Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend. We will see you next week. Thank you for listening to Galaxy Brains, the weekly podcast from Galaxy Research. I'm Alex Thorn, head of firm-wide research at Galaxy. Follow me on X at Intangible Coins. Follow Galaxy Research on X at GLXY Research. Read our written reports at galaxy.com/research. And don't forget, if you like Galaxy Brains, to like and subscribe on your favorite podcast platforms like YouTube, Spotify, Apple Podcasts, and more. We'll see you next time.